So I'm the global head of digital assets at ED&F Man Capital Markets, and we are a U.S. broker dealer and FCM. FCM stands for Futures Commission Merchant, and we're members of, globally and in the States, all the major derivative exchanges, the CME, ICE, Eurex, Hong Kong, etc. And we have, I'll go through a little overview of the firm quickly. On the broker dealer side, we have fixed income clearing, we have repo desk, we have corporate bond market making and trading, equity clearing. We have an upstairs interdealer broker, equity derivatives team. We have a metals team. We're LME members. Forgot to mention that one. And yeah, so pretty much, all capital markets activities we cover. We're not a bank. Our parent company is a commodities trading firm. It's actually dates back to the 1700s, but the capital markets division was started about 10 years ago. And I started in about 8 years ago, 2013, on the global risk team, doing global risk coverage out of New York. But I was always very, interested in Bitcoin pretty early on, 2012, 2013, going to meetings and sort of developing a network and community in Bitcoin and digital assets. And so I was excited when the CME mentioned to us in the summer of 2017 that they were looking at launching a Bitcoin futures product. It was going to be cash settled. And so we built a business at EDF Man around that, because I knew a lot of the different players in the space, mostly in the early days, crypto hedge funds, and I can go into how that's evolved. Let's see if I can go to the next slide here. Bear with me a second. There we go. So this slide kind of covers a lot of the things that I'd already talked about. We also have a FX, foreign exchange team. But, our DNA is really based in commodities. And that's why I think that Bitcoin is a good fit for us, because if you go back to 2015, the CFTC was really the first regulatory body in the US to really designate what they felt that Bitcoin was, and they said it was a commodity. And that, I think, sort of paved the way for the CME and the CBOE in December of 2017 to launch futures contracts. So let's see, I think I can go ahead to the next slide. So we've seen, the early adopters, as I said, were really crypto-focused firms, proprietary trading firms that, were more, sort of leading edge. That they were seeing these things trade overseas and in largely unregulated markets, and adding the CME product for either hedging their spot physical holdings or as a basis trade. For those of you that know what basis trading means, it's the difference between the spot and where the physical spot product is trading versus the futures. And if the futures curve is upward sloping, that's contango. If the futures curve is downward sloping, that's backwardation. And so if the futures curve is upward sloping, to trade the basis, you would sell the futures and go long the underlying. It's a very popular trade in treasuries markets dating back decades. So anyway, now these last couple of years, we've slowly started to see more traditional hedge funds, your blue chip brand name hedge funds, and as well as family offices start to get involved when they're either looking to just allocate a portion of their portfolio to Bitcoin, crypto, and maybe because of different restrictions, the best way for them to do that is through a regulated derivative exchange in the US, because a lot of the overseas products are not available for US investors. So that is something that's also driven the demand that we've seen of new customers signing up with us. I'll add that we're institutional only. We don't do retail. So all of our clients are hedge funds or family offices or other financial institutions. So and so as far as progress in improving regulated crypto markets and derivatives here in the States, I touched on the CFTC really being the first to act back in 2015. There's a lot of chatter and speculation along the lines of the SEC approving an ETF. That's a question that I get asked about, on at least a daily basis. And it did appear from Chairman Gensler's comments last Tuesday that he signaled that they will probably approve an ETF based on a futures product first. And I think that makes sense, building off the work that the CFTC, the groundwork the CFTC has already laid. So I think we'll see that. We've already seen the SEC approve some mutual funds based on CME futures. So I think that's sort of the natural progression that we're starting to see. And then, anyone's guess is as good as mine as to when the SEC actually approves physically backed ETFs. I would guess it wouldn't be this year, but. And so what are the basics of the crypto backed futures and options here in the States? There's really two flavors. I touched on the CME. The CME has cash settled Bitcoin. The big contract is which is the original contract that launched in 2017, is 5 Bitcoin per contract. So that's a rather large contract in notional terms. At $45,000 Bitcoin, that's a $225,000 notional contract. And so what does cash settled mean? Cash settled means that when that contract expires, you just get a P&L in your futures trading account. There's no actual physical delivery. So the ICE, through their crypto derivative exchange called BACKT, BAKKT, they launched a physically delivered product about 3 years ago. And that is 1 Bitcoin per contract. And it has physical delivery on the 3rd Friday of each month. And what that means is that if you have a custodian account at BACKT, just like you would at Coinbase or Fidelity or wherever various custodians, that 3rd Friday of the month, if you elect to stay in the contract, that your FCM can help you take physical delivery of the Bitcoin. And people say, why would you do that? There could be any number of reasons. Maybe the futures gets disconnected from the spot physical, and there's a big run up in Bitcoin, and you say, well, I don't just want the P&L, I want to actually take delivery of that Bitcoin. And so that contract allows you to do that. There's various pluses and minuses about the cash settled versus physically delivered, and it's just a different flavor. In traditional markets, say crude or even corn or grains, gold, etc. There's always been physically settled versus cash settled contracts. They're just different flavors. And so one interesting trade that our firm sort of pioneered with regards to the cash settled Bitcoin contract is a trade called an EFP, which is exchange for physical. We were the first one to facilitate that for two of our clients, where they swapped, one's long the futures, one's short the futures, or you could be initiating a trade where you're just flat and then you end up long or short. And they privately negotiate a price off exchange. They swap those positions, and then they also do an OTC trade with the physical. And there's various reasons that clients, want to do that trade. They could be balanced. They could be an OTC market maker, and they need to balance out their book, but also in a hedge fashion. So that's been a popular trade that we've seen, gaining momentum. Block trades, I guess I should have covered that one first. That's just the futures leg of the EFP, but you can also just do a block. And one of the reasons that you might do a block is if you don't really see the liquidity and the size on screen for the futures contracts, or especially the options on the CME contract, futures contract. If you don't see the size that you need for, you're doing a really large trade, say $10 or $20 million, you might call up a block liquidity provider and say, hey, I don't want to move the market. Can we negotiate this off market? And then each side books it in through their FCM. So we would book it in for our client and match it up with the other counterparty, especially if they're going through another FCM. So that's a trade for Bitcoin that is definitely gaining momentum as well. As far as margin, it's been a relatively high margin product. If you compare it to traditional products, S&P 500, crude oil, natural gas, etc. When the CME and CBOE product first launched in December of 2017, it was close to 50% margin, I think 47 to be more exact. Now it's down to maintenance is 33 and initial is 37. So it's moving in the right direction. Definitely higher margin than the offshore unregulated products, but I think that makes sense when you view it in the wider lens of, are the offshore unregulated products more for speculation, and these are going through a regulated, exchange and clearing mechanism and marketplace. And so I guess I'll also clarify that the role that we play, we're members of the CME, or the ICE. They're products of those exchanges and their clearinghouses. But the positions that our clients take on, they sit on our books, and we call the clients for margin. Margin is T+1. So we issue a margin call at midnight, and then that's met with a wire the next day. And we really serve as the risk intermediation buffer between the client and the actual exchange. So the unregulated exchanges overseas, if you go over your margin or your margin drops to a certain level, you just get stopped out of the position. Whereas with the US, FCM clearing model, we would issue a margin call, as I said, and then that would be, met the next day, instead of just your position just gets closed out. So I think that's a key distinction between the offshore unregulated market and the U.S. regulated market is that clearing model. Excuse, I think our yard service is here. So trends. I think we're going to see more products. So as I was going through earlier, we have the big Bitcoin contract on the CME futures and options. We have a micro Bitcoin contract, which is 1/10 of Bitcoin. We have a cash settled Ethereum product on the CME, which is 50 Ethereum per contract. We have the physically settled ICE backed contract, futures and options, and that's 1 Bitcoin per contract. We're talking to some new exchanges that will follow the U.S. regulated clearing model that will hopefully be coming online before the end of the year. So I think we're going to see, more products, which I think is healthy, more ways that that institutional investors and also retail investors. I think that's going to help liquidity. We've already seen that with the micro Bitcoin contract that's more accessible to retail, even though we don't support retail clients. That adds more liquidity and volume, which helps our clients. And yeah, I think eventually we will see more prime services. Like that's prime brokerage has sort of been a kind of a catch-all word phrase that has been thrown around a lot in the Bitcoin and crypto space, going back even maybe 5 years. But I think to really have true prime services, it would have to be an FCM, because those are the only ones that are able to access the futures markets here in the United States. And you'd have to have some sort of custody component involved with that. We've been actively exploring custody partnerships in Bitcoin and crypto. We don't have anything in place yet, but it's something that we're definitely looking at. And I think, as I said, there's already mutual funds that are crypto backed, and eventually there's going to be ETFs and swaps market. You're starting to see those things evolve. And most people probably saw the news that Goldman did an NDF a few months ago. So the banks are starting to dip their toes in. And let's see. Yeah, I think that was really it. I'll open it up to questions.
Brooks, we have a couple of questions for you.
Okay, great.
What's the deal with the options on the futures for Bitcoin? Is there any liquidity today?
Yeah, that's a great question. Liquidity is rather low on the CME options on futures, and I think there's a few reasons for that. It's a large contract, as I said. It's 5 Bitcoin. The margin is relatively high, 37%, and that's why my hope is that eventually they'll launch options on the micro contract, which is 50 times smaller. It's 1/10 of the Bitcoin, and I think similar to what we saw evolve in the S&P futures market years ago, where it used to just be the big contract, and then they launched the E-minis, and then options on the E-minis really took off, and that sort of was the market. I think if the CME does launch options on the micro contract, I think we'll see a similar scenario play out. Right now, most people know that globally, most of the options volume is on a offshore exchange based in Europe called Deribit. So we definitely follow that closely, but we obviously we're a regulated entity, so we can't participate in that. But I will, another point I'll make is that if you do want to do larger size and you're not seeing liquidity in the options on the futures, a block trade, if you're connected to the right counterparties, a block trade is a way that you can get the liquidity and access that you want.
So do you guys actually help facilitate some of those block trades that, that you're talking about, where the pricing isn't like, 40% round trip spreads?
Sure. So we don't currently have a dedicated desk to facilitate that, but we have a large client base that specializes in that. So we would facilitate it to the extent that I would introduce clients to desks that I feel comfortable with, that can make good prices. And it's not, it would be, I can't quote what the percentage would be, but it's not, you said 40% round trip. It wouldn't be anything egregious. I haven't seen anything like that.
Got you. Okay. We got some questions coming in here.
Sure.
This gentleman's asking, when structuring a strategy in crypto, do you feel that more or less complicated trading strategies yield the best results?
I don't. So we don't really advise on trading strategies. I mean, most of our client base are, sophisticated shops that, they could be, like I said, they could just be hedging a spot position. They could be doing high frequency, market making, where they're trading on the spot exchanges. So I'll add that the cash settled CME Bitcoin contract settles to an index that is based on an average of 5 spot exchanges. So Coinbase, Bitstamp, Itbit, Gemini, and Kraken. And, I think a lot of our clients trade spot on those exchanges. They trade the futures product. They have pretty sophisticated trading strategies.
So with regards to the mini contract on Bitcoin, when did that start trading and what do the volumes look like today?
So that contract launched 2 months ago, and it traded 100,000 contracts in the first, I think, week. It was the third most successful launch of any contract on the CME. So I think it immediately, gathered adoption. As I said earlier, I think one of the reasons is more accessible to retail. It's a $4,500 notional contract versus a $225,000 notional contract. We've been very excited about that.
What's the margin on the $4,500 contract and the 200?
It's the same. It's 37% on both.
37% on both of them?
Yeah, of notional. Yeah.
Got you. Okay. And how are the volumes on the large contracts? Have they picked up? What have you been seeing?
Sure, they've been steady. I mean, Bitcoin, just in general, spot exchanges and derivative exchanges, when the price is moving and it's more volatile, then the volumes go way up. So it was like last year, for instance, it was pretty quiet, a few thousand contracts per day until we really saw that run up, through November, December, January. Then we're doing, billions of dollars a day versus, hundreds of millions. So But it's been steady. Each cycle we see
Hello.
when we see more volatility, we see the volumes, are much higher than they were in the last cycle. So as more clients and institutions get onboarded at FCMs like ED&F, and as more retail starts to participate at the retail brokerages, we've definitely seen a steady trend in the right direction.
Have you been seeing more institutional investors, look to you guys to settle, the futures inside of endowments, foundations, or has it just been mainly hedge funds that have been coming to you and buying these types of contracts?
Our bread and butter is the faster money, the proprietary trading, high frequency trading, and hedge funds. But I've definitely, the last 6 months, talked to more of the family office, endowment type clients. So it's definitely, adoption is definitely widening.
And you've been pulling in a lot of new hedge fund clients that have been trading?
Yeah, it's been steady. I think we're in a good position since we're not a bank, and the banks have been hesitant to get into this space for clearing and prime services for Bitcoin futures and options. So we're still seeing a steady interest from hedge funds as well.
All right, that sounds good. We thank you for taking the time and giving us an update and insight into the options markets on futures and on the cryptos, and that's a lot of the background and roots of our organization is very much been hedge funds, institutional type clients. So we appreciate you taking the time and to go in this direction.
Absolutely. Thanks for having me.
Thank you.